Hello students, welcome to comscienceclasses.net with today's focus being on Commercial Arithmetic 2, a Form 3 mathematics topic. Now the question of our focus today is on the screen and it reads, the table below shows a monthly income tax rate for the year 2005. Monthly taxable income in Kenyan shillings and tax rate in percentage. Taxable income from 1 shilling to 9,860 shillings, taxed at 10%. Then taxable income from 9,681 shillings to 18,800 Kenyan shillings, taxed at 15%. Taxable income from 18,801 to 27,920 Kenyan shillings, taxed at 20%. Then taxable income of 27,921 to 37,040, taxed at 25%. And lastly, taxable income from 37,041 and above, taxed at 30%. Peter's monthly earnings in the year 2005 were as follows. Basic salary of 35,600 Kenyan shillings, house allowance of 12,000 Kenyan shillings, medical allowance of 2,800 Kenyan shillings, transport allowance of 3,400 Kenyan shillings. Peter was entitled to monthly tax relief of 1,056 Kenyan shillings. Calculate his monthly taxable income. For us to be able to calculate the taxable income for this case, we compute it using the formula taxable income is equal to salary plus allowances. I repeat, taxable income for this case or for this situation is salary plus allowances. And Peter's salary is 35,600. We add to house allowance of 12,000 Kenyan shillings, add to medical allowance of 2,800 shillings, add to transport allowance of 3,400 Kenyan shillings. And this one gives us a total of 53,800, as we can be able to see it in the solution there. So what we are referring as monthly taxable income is just basically the amount on which tax is levied. So the amount on which tax is going to be levied on a monthly basis for Peter's income is 53,800, gotten by taking salary plus allowances. For part B, calculate the monthly tax paid by Peter. So we have been given the table for taxation, and Peter's taxable income is 53,800. That means it lies in the fifth bracket of 37,041 and above, because 53,800 is actually above 37,041. Therefore, it lies in that bracket. So we shall be able to calculate for the first bracket how much Peter is supposed to pay as tax, for the second bracket, for the third bracket, the fourth bracket, and the fifth bracket. So for the first bracket, Peter is supposed to pay a tax of 10% of 9,860, and this gives us 986 Kenyan shillings. In the second bracket, Peter is supposed to pay 15% of what lies in that bracket. And what lies in that bracket, we get it by taking the amount in the second bracket, that is 18,800, then we subtract the amount in the first bracket, which is 9,860, and that gives us an amount of 8,940. So 15% of this amount gives us 1,341. Then in the third bracket, he is supposed to pay a tax of 20% of the amount that lies in that bracket. And for us to get that amount, we take 27,920 minus 18,800. And that gives us 9,120. 20% of that amount gives us 1,824. In the fourth bracket, the amount to be taxed, we use the same procedure. The amount to be taxed is 9,120. 25% of that amount gives us 2,280 Kenyan shillings. In the fifth bracket, we check on the amount that's supposed to be taxed, which we are calling as the monthly taxable income for Peter, is 53,800. So far we have taxed 37,041. So the balance is 16,760 to make it 53,800. So 30% of this amount that will fall in the fifth bracket gives us a tax to be paid of 5,028. So when we sum all this that Peter is supposed to pay in form of tax, it gives us a gross tax of 11,459. But Peter, being a faithful taxpayer, the government relieves him. So the government offers Peter a tax relief of 1,056. So from the gross tax, we less the tax relief of 1,056. And this gives us a net tax of 10,403. So this is the net tax that Peter is supposed to pay to the government, that's to the KRA, Kenya Revenue Authority. So the amount that Peter is supposed to pay to KRA for tax collections is 10,403 Kenyan shillings. Then part C, in addition to tax, the following deductions were made to Peter's monthly income. Service charge of 100 shillings, then health insurance fund of 320 Kenyan shillings, 2% of his basic salary as widow and child pension. Then the question is calculate Peter's net pay that month. So for us to be able to get the net pay for that month, we need to get the monthly gross income for Peter, then subtract total deductions. And in this case, one of the first deduction that we are going to include is the net tax that we have just calculated in part B. Then that net tax we shall be able to add to service charge of 100 shillings, then add to health insurance fund of 320 shillings, then add to 2% of the basic salary of the 2% of the monthly basic salary for Peter of 35,600. Then that will be able to give us the total deductions amounting to 11,535. So when we subtract this amount from the gross income, monthly gross income for Peter, it leaves us with 42,265 Kenyan shillings. So this is the net pay that Peter is going to receive on his account.